It's unfortunate timing because Russell and Kogan's done a great job building a business to get to that sort of scale and to be able to float, and he's a real immigrant success story like many others in Australia. But this is just terrible timing. A federal election going sideways, the Brexit, Donald Trump on the horizon. It's just not a great time to be hitting the markets with a new business. Stark contrast to 6 weeks ago or so when we spoke about WiseTech, which was a major billion-dollar Australian tech IPO that has done really well. It's now a market cap of about 1.4 billion, global SaaS business with lots of recurring revenue and lots of profits. Kogan's a different story, obviously. It's a smaller retail business, mostly Australian, with lower margins. And as you can see from those figures, down 10-12% already on debut. So disappointing timing, and probably not much that could have been done by the brokers or Kogan himself. But you're right, the markets are kind of surviving this current choppy change, but I wouldn't like to be IPOing a company right now in Australia because I think the exit doors are open and people are starting to think about resources, gold, dividends, some of the blue chip stocks now. And so the opportunities for newer, younger companies to IPO in Australia, I think, are slipping away this year.
So you say the appetite for new stock is looking pretty grim overall. What does that mean for the IPO pipeline? Is there anything we should be watching in Australia that's about to make debut that could possibly schedule this off?
Well, there were two similar companies in the Kogan space, the Catch Group from Melbourne and the Aussie Commerce Group, now called Lux. Both of a similar size to Kogan, a little more profits, but both have pulled their IPOs. Catch never really got to the gate, but the Lux Group appointed some brokers and recently announced not to go to the market, and that's probably isolated a bit to the online retail sector in Australia, where Surfstitch, Temple & Webster and some others have come under a lot of pressure because they've been producing results that were less than forecast. So yeah, online retail, we won't see any IPOs, I don't think, for the rest of the year. There's still some strong tech companies coming to market, but as in all things Australia, there's a cycle coming back to resources, and I wouldn't be surprised if we see some junior miners and especially kind of lithium type and graphite type companies coming back to the market, and Australians with short memories will go back to the mining scene. So glass half full, I suspect. There are companies coming, but nothing major like WiseTech. And I think Brexit and the US elections and Christmas and Mr Turnbull's troubles with the Senate will mean the activity levels will be lower than they should be.
This is slightly off topic, but also flows in with what you're saying. As a result of all of this, do you expect that we might actually see more M&A activity in Australia as a result of all of this market volatility and the depressed IPO pipeline, as you mentioned?
Absolutely. I think Asian buyers are looking at Australia strongly now because of our lower dollar and the fact that we've got some assets in agriculture, mining and tech and services that are interesting, and there are already Indian, Japanese and Chinese companies looking hard at Australian assets in those sectors. Australian companies themselves, I could imagine that JB Hi-Fi and Harvey Norman are looking with interest at what Kogan is doing, and are there opportunities for them to acquire underpriced online assets to help boost their offering. So yeah, I think there will be more M&A activity, and I think the public markets will be very, very negative towards anyone who doesn't hit their forecasts or has any negative surprises.